We've got an economy that seems to be firing on all cylinders. And, of course, this is something the president keeps pounding it as a reason why as well. We have a trade deal, or what looked like a trade deal, looks like a trade deal, I should say, with Mexico that might just prompt the Canadians to get involved, the Chinese to take notice, and to keep this all going. This is part of the reason why you see a lot of companies sort of sharing the wealth and the benefit of the riches that's in the economy, of course, courtesy their own lower tax rates. Disney, the latest to say that it's upping its minimum wage $15 an hour by the year 2021. The tax cuts, of course, a big reason for that. Other companies have been following suit. To Center for Freedom and Prosperity Chairman Dan Mitchell. Dan, what is driving this, you think?
There's nothing that works better for ordinary people than free market capitalism. Entrepreneurship, investment, that's what drives wages, not government mandates or government regulations. So the fact that we're getting lower tax rates and we're getting a little bit of deregulation, that's helping the economy grow faster. That's good news. That's the path that we should follow.
You know, on the same day, we're learning of at least the broad outlines of a deal with Mexico that would also include for higher wages for Mexican workers, indeed 15, maybe 16 U.S. equivalent dollars an hour. What do you make of that?
I have very mixed feelings about this NAFTA deal. We basically had two choices. Trump was either going to pull the plug on the entire deal, or we were going to get modifications that, in my mind, made NAFTA not as attractive. Well, if those are the two choices, I'd rather take the modifications because it still means that the core of NAFTA would still be in place. Now, we still have some T's to be crossed and I's to be dotted. The Canadians need to be brought in. But compared to completely deep-sixing NAFTA, I guess this is good news.
Yeah, you know, my gut tells me here that anything is different, maybe technically better than what we have, but it isn't like ripping up an agreement from scratch and starting anew. Now, that's always judged in the eye of the beholder. If you hated the NAFTA deal, maybe you're not too psyched about that. If you like the NAFTA deal, you're a little enthused by that. But clearly the markets, I think, for now, just like down the uncertainty that we're going to a full-scale trade war, off the table. They could be wrong, and they might be missing it. But what do you think of that?
Markets like certainty, and they definitely prefer a modified NAFTA, even if it's weakened. They prefer that compared to eliminating NAFTA. Now, let me make an important point. NAFTA, at least as it exists now, is 1,700 pages. A true free trade agreement should simply be one sentence. There are no tariffs on your goods, and you have no tariffs on our goods. So obviously this is not libertarian nirvana, but considering where we thought Trump might go with completely ripping up NAFTA, I guess we have to be pleased.
You know, the president is arguing. I wanted to catch up with you on this. It was a big issue last week when he sat down with Larry Zaire to talk about all these investigations and the possible, you know, switch and control of the House that would get Democrats going on more investigations, even impeachment. He said, well, go ahead. You could hurt this whole rally. Stocks would crash. What do you think of that?
I'm much more worried about there being a Fed-created bubble in financial markets. I think that's what would cause a real correction. I think markets have already priced in the fact that Democrats will take the House and that there'll be nothing but investigations as far as the eye can see.
Do you really? So the markets have given up on the notion that Republicans hang on to the House?
I think if the Senate went Democrat, then the markets might react adversely. But I think if you look at the political betting markets, I think almost everybody with real money at stake, I think they've already figured that Democrats will control at least one House of Congress next year.
So what happens if Democrats just miss in the House and they don't?
Then I wouldn't be surprised if you saw a positive surprise in financial markets, assuming that investors would expect additional tax cuts, additional deregulation, and maybe, you know, knock on wood, some much-needed spending restraint. Because as we've talked about before, Neil, if Republicans don't begin to control spending, they're going to lose their tax cuts sooner or later.
Yeah. What do you make of just the overall temperament, though, right now, of the markets and this bullish enthusiasm? We got the longest bull market going. It isn't necessarily a very expensive market. Apart from the president, whether he, you know, deals with all of these slings and arrows and his own tweets and gaffes, what do you think? Is it still in place? Will it stay in place?
we could be having this conversation back in 2007 when the market was
Very
looking
true.
really strong, and most people missed it. And for all I know, if I said that everything's going great, tomorrow the stock market would collapse and I'd look like an idiot. So I try to minimize those opportunities to make myself look foolish, but I think at the end of the day, in the long run, it's all about, as I said at the start of the interview, free market capitalism is what gives us more prosperity. Yes, there'll be ups and downs and speed bumps all along the way, but good policy is the recipe for more prosperity.
Yeah, it's all about the fundamentals. You're quite right.
Yes.
Dan, I would never play such a tape back if you made such a bold move, but I think my staff would. Dan, thank you very much. It was good
Thank
seeing
you,
you.
Neil.